IRS rules and regulations that were created back in 1975 allow you to do many different things and allow you to invest in many different um, asset categories, I guess you could say. So you can certainly do things beyond the stocks, bonds, and mutual funds that you would find in a more conventional or traditional brokerage firm or an account with those
Hey there,
institutions.
I am Dr. Jason Ballara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why? Hi everyone, I'm Jason Ballara, and this is the Know Your Why podcast. Today I'm here with Scott Maurer. Scott is the Vice President of Sales for Advanta IRA, a nationwide self-directed IRA administrator. He's worked for Advanta since 2006. Actually, personally, Scott has been my connection at Advanta IRA, so I'm very excited to have you on, Scott. I know there's more to your bio, but I always find it more interesting to let the guests tell their story themselves. So first, let me just say thank you for coming on and taking the time out today to talk to us.
I appreciate it, Jason. Thanks for having me on. Love coming on and talking about what we do and kind of add a little bit more on my bio. Yeah, you said I started in 2006 with Advanta IRA. I had a different name back then, but I've been doing this for over almost 18 years now. I knew very little about retirement plans in general, much less the self-directed aspect of it when I first started. So it was kind of one of my really first professional job that I had. I mean, I worked in recreation and worked in youth programming and doing summer camps, basketball leagues, things like that on a local level. But once I got into, I went to law school, got out of law school, started working for Advanta IRA. And like I said, knew very little about what we did or what we do, and spent a lot of time early on just learning business. And I've been fortunate enough to be with a company this long. And knowledge basis has just certainly grown from there. And I've enjoyed speaking to people like yourselves and investors and clients and really telling them about what a self-directed IRA is and all of the background information that entails.
Yeah, and those are specific topics that I do want to ask you about, kind of diving in on it. But you're an attorney. How did you kind of make the connection to Advanta? How did you get involved with them? I know you're not really, at least at this point, working on their sort of legal side of things. So how did that come to be?
Sure. So yeah, going to law school and even when I went to law school, I knew that I wasn't going to be, what you see on TV, the courtroom attorney, even though it has that allure and it's not saying I wouldn't have the capacity to do that or the ability to, just wasn't something that interests me. So I knew going to law school was really about getting a degree, getting the education that would help open up, other doors, or whether it could be a transactional attorney, like in estates and trusts and doing things like that. So when I got out of law school, I was like, let's go find somewhere to work. And our owner, Jack Callahan, owner of Advanta, is also an attorney, and so that's how I got connected in with this company. And to get started at the time, he was just a few employees and looking to grow. He and I connected there, and I've been here since. I still do some legal work, not for, as you mentioned, not for Advanta clients. I'm not permitted to do that, but I do some, LLC corporate setups. I do some a little estate planning things here and that can draft, some documents. So I do keep some of that. But yeah, when I went to law school, there was never a time I was like, hey, I really need to be in the courtroom. I want to be a prosecutor, I want to be a defender, defense attorney, anything like that. It was more about, it's getting the education and getting that kind of foundation to move on to other things.
Yeah. And I think, I until I got, sort of more heavily into real estate, I probably thought of, being attorney was very much what you see on TV, what, kind of that sort of thing. And certainly that can be a part of it, but there's so many other aspects within business and real estate and all of that, where that background and knowledge comes into play, sort of tremendously. So I now see those connections, but I think like for people listening, they may not understand where that would make sense. Well, let's start with sort of the basics in terms of self-directed IRA, can you sort of describe that to someone? If someone's like, well, I've heard of an IRA, but I don't really understand what, like, maybe they're already picking their own stocks in that IRA and they think it's a
Mhm.
self-directed, but I think there are a couple of maybe common misconceptions that would be great to touch on.
No, you're hitting the nail on the head. I mean, it's yeah, kind of the people who have say, oh, I have a like I said, I have a self-directed IRA through my brokerage firm. It's a little bit of a misnomer in our estimation, simply because yeah, you're still limited to what is available on that particular platform. But the IRS rules and regulations that were created back in 1975 allow you to do many different things and allow you to invest in many different um, asset categories, I guess you could say. So you can certainly do things beyond the stocks, bonds, and mutual funds that you would find in a more conventional or traditional brokerage firm or an account with those institutions. Like I said, the IRS has a much broader range of things they will allow you to invest in. So that's kind of where companies like ourselves come in. What we consider to be a truly self-directed IRA is not where you're, say, like you said, picking from a number of different stocks. You're actually picking from different asset classes, whether it's real estate, and I mean real estate. You open up that term, and you have anything from single family rentals to rehabs to multifamily to tax deeds, and there's so many different things there. And then going beyond into private placements and precious metals. There's a lot of different things you can do, and that's really what a self-directed IRA, again, how we define it, is the ability to choose really your own investment class and choose things beyond maybe what you're being fed or what you're being forced into or limited by those brokerage firms. And so that's why we exist, to allow people to hold those investments that make the most sense to them, maybe things they feel more comfortable with. That's where we come into the picture in facilitating that, allowing you to keep the tax protections of your IRAs and whatnot. But the self-directed IRA, the word self-directed really is just a moniker. It's almost even just a marketing term to refer to what you can do with it. But at the core, the IRAs, still traditional Roth, things like that, where you're maintaining the same contribution distribution rules. You're just getting a lot more diversity in what you can actually invest in.
Yeah, and I think that's a great, the way you wrap that up is really a great description, at least from my understanding, is it's just, it allows you to have more diversification within your IRA, because I think calling them self-directed IRAs sort of almost does it a disservice, because I do think it makes it confusing for people that might think they already have. I mean, I've talked to investors and they're like, no, I self-direct my own IRA. Sure, if you've got it with a brokerage firm, you might be picking your own stocks, but you're sort of limited beyond that. Which brings the question: can you invest in stocks, like in the stock market, through a self-directed IRA with Advanta?
Yeah, not directly through us, but simply because we are not a broker dealer. If you had cash with us and said go buy 10 shares of Amazon or Apple, we can't do it on that because we don't have the platform to do it. But I think maybe kind of leading into something I always like to point out is that you are permitted, any individual is permitted to have multiple IRA accounts. So you can have an
Right.
IRA with a Schwab or Fidelity. You can have an IRA with Advanta doing different things, and you can move money between the accounts whenever you'd like. There's no tax consequence. There's no restriction on doing it. So,
Mhm.
yeah, we can't buy those directly through us because we're not a brokerage firm. But you could, if those are some of the things you're looking to do, you'd just simply keep an IRA, or you'd open an IRA on a platform that would allow you to do that, and you could certainly have an account with us that enables you to take advantage of the alternative investments.
Yeah, and that I guess goes back to that diversity term, or diversification within your portfolio, because that, I mean, and just for people listening, like this, I did exactly that. I took, I had an IRA, I took a piece of it and moved it over to a self-directed IRA at Advanta so that I could invest in something. Um, it, and again, here to that diversification, I've got my account at Advanta. I've got some of it invested in a multifamily real estate fund, but I've also got some of it invested as actually essentially like a venture capital startup type of investment. So there's it's just cool to be able to kind of do whatever you want and then keep it within that same IRA, and have those same, as you mentioned, the rules. Will you go over those rules just for people, that, again, I think there's a lot of people that maybe just don't quite understand, maybe explain the difference between traditional IRA, Roth IRA, and sort of for people to understand how that all works.
Sure, yeah. So the IRS has a couple of different types of IRAs, and I think and some can make more sense than the others if you're looking to set one up and get started anew. The differences between the accounts come down to one of two things typically: either the tax treatment
Mm-hmm.
of the money you put in and the money you pull out, and when it's taxed, and also the amount you can contribute on a given year. So there are traditional and Roth IRAs, the two most common types of IRA accounts. A traditional IRA, as we call it, a tax deferred or a pre-tax IRA, where your contributions that you've made to those accounts over the year, you get a tax deduction up front. When you're filing your 1040 every April, you make a contribution to a traditional IRA, you get a write-off.
Mm-hmm.
That's the benefit you get now. The money grows tax deferred. You don't pay tax really with any IRA as you invest and reinvest it. But with a traditional IRA, because that money has not been taxed yet, when you do hit the retirement age, you get past age 59 and a half, or you're hitting your early 70s when you're required to take money out, you're taxed on the money at that time. So you get the benefit of the tax deferred growth, that you can compound your money more quickly, but you will pay tax down the line. Then you have the reverse or the converse of that, the Roth IRA, where you make contributions to a Roth IRA account. You do not get that immediate tax deduction when you file your tax return. But that money is deemed to go in then on an after-tax or post-tax basis. Your money grows tax deferred as you invest and reinvest it. And when you hit retirement age, the entirety of your account, you pull money out, is completely tax-free. So that's the huge difference, again, between your traditional IRAs and your Roth IRAs is going to be the tax treatment. Most people who have old 401ks, they may have built up a lot of savings working for a company or working for the government or working for an entity that had one of those employer type plans. Many of those plans are pre-tax, so you typically roll those into a traditional IRA, but we're seeing more and more of those types of accounts where they do have Roth components to them as well. So again, so the difference between traditional and Roth IRA is going to be the tax treatment. Then there are also SEP IRAs. There are simple IRA accounts for small businesses where you can just simply contribute more in a given year if you're self-employed. And there's solo 401k accounts that kind of fall in line with the SEPs and the simples. Simply, again, just you get to contribute more money as a self-employed individual or the owner of a small business or a side business. Just gives you more that you can sock away each year.
Yeah, and we have within my company we have a SEP IRA. We do that. I contribute for myself and my employees through the SEP IRA, and it's up to 25. I believe the max is 25% of your income in that year. So it's a nice. Correct. It's not as good as the solo 401 or solo 401k in terms of the amount you can put into those accounts, but it's a nice option to have and benefit to be able to give employees.
Absolutely, yeah. And it's I think the maximum traditional Roth contribution for 2024 is going to be $7,000 a year or $8,000 if you're over 50. But yeah, for people who are self-employed or have a small business like yourself, the SEP contributions up to 25% to a maximum of I think $69,000 for 2024. So yeah, just much larger amount you can potentially put in there, whether it's for yourself or for you and your employees.
Yeah, and it's hard to get to the point. Stocks are different, but like if you're trying to invest in some of the non-traditional assets, it's hard to get to the point of having an investable amount when you're putting in $7,000 a year. It takes a long time to get to that, so it is nice to be able to do it in bigger chunks and sort of grow that retirement fund faster through one of the sort of business related accounts. So when someone decides to open an account at Advanta, can you maybe walk people through the process, of what they can expect to happen and how that all works towards getting themselves to have a self-directed IRA?
Sure. Yeah. The process itself, and to go, so the process is, and this is why some of the brokerage firms choose not to deal with this. There's more paperwork involved when you're self-directing, and that's, when you're opening up an account with us, it's probably the same process up front. But obviously, when you go to make investments, it's a bit different than buying a stock. But the initial process is filling out the information with us that you would do if you were opening up a bank account or an IRA with a brokerage firm. You're giving us you're filling out an application that contains your name and vital information. You're designating your beneficiaries, who would receive the account if you were to pass. And then the last step really of the opening process is getting your funds moved. Are your funds coming from another IRA account? If so, there's a certain document and certain procedure for that. Or is your money still with that old employer's plan? Like you have a 401k or an old 403b plan to a former employer that you would like to roll over into the self-directed IRA. There's a little different paperwork, different process for that. So that's something that we walk people through. I mean, the paperwork takes 15 minutes to fill out. Getting money transferred from another IRA usually happens within a few days to a week or two. Getting money rolled over from an old 401k sometimes can take, a week to maybe 3 weeks. It really just depends on the other side. That's the unfortunate part of the process that we can't control, is really dictating, saying, oh yeah, we'll definitely have your money by this date, because we are relying upon that, your other custodian, your other administrator, to get those funds to us. But transferring from another IRA, rolling over from an old 401k, again, both are tax-free movements of money. That's the process that we help manage up front, helping you get the account established and then getting those funds transferred, or letting you know what you would need to do on your end to help facilitate that part of the process.
Yeah, and from experience, the dealing with you folks in that process was not a problem. That was pretty easy. It really is the getting the money moved from, and it seems these other brokerages do not want you to pull money out of there. So it tends to be a little bit of challenge. It's like they're almost dragging their feet on purpose. But that was, to me, that's the hardest part, is just getting it moved over. And I've had that same feedback from people that I have, like investors of mine that I have said, hey, go, talk to the folks at Advanta and set up an account there. So the problem has always been getting the money over. It's not, the process itself is actually pretty pain-free.
Yeah, and unfortunately, usually, I would say probably 90 to 95% of the time it's fairly straightforward. But yeah, you're right. The other 5 to 10% can be the other custodian dragging their feet a little bit, or if somebody hasn't liquidated their account by the time we send the request, and then things get rejected and pushed back. And unfortunately, there is no uniform kind of process for whether documents can be accepted via fax, whether they need a special stamp, whether they need originals, things like that. Every custodian, in a sense, sets their own requirements, and we certainly keep a huge database of what those requirements are. But that's sometimes the difference in, hey, one transfer can take 3 days and the next one can take 3 weeks. So yeah, that definitely is the frustrating part for us as well to manage. Yeah,
and similarly, sort of on the once you get the funds transferred in and you're going to make an investment, it's, and you can certainly expand on this, but it's really, to me, not very different than if I were to make an investment with cash. There's again, another paperwork or two to fill out, but it's been, for me, it's been, someone's given it to me as a DocuSign, filled in most of everything for me. So it is a very simple process. And, I guess kudos to you and your team that making that kind of easy to manage and get through the process without, a ton more headache.
Yeah, you're right. Yeah, when you're investing through your IRA, the important thing is that you always want to preserve the tax status of the entity. As such, you need to make sure that the investments are titled that way. If you were to make an investment using IRA funds but title it in your personal name, the IRS is going to look at that and figure that you took a distribution from your account. And depending on your age, the type of an account, you could be looking at a lot of money in taxes and penalties. So that's where our kind of second phase of what we do is helping administer and title the assets, making sure that the subscription documents, the contracts are titled in the name of the IRA account as opposed to your name personally. But outside of that, the paperwork is the same. It's a different investor's name that goes on the document. There's a different tax ID number that's used. We want to make sure that the tax impacts or any tax reporting for the entity are reported back to our tax ID number, not to your social. So it's just little little small changes like that. But other than that, the paperwork, like you said, Jason, is basically the same. It's just going to be a few tweaks here and there. Same process involved as well.
Yeah. On the subject of taxes, I think this is one of the things. So, people, one of the big draws to investing in real estate specifically is the tax benefits. And then, so you'll see, kind of social media marketing, things like that. It's going to be like, look at all these tax benefits associated with investing in real estate. Oh, guess what? You can also invest out of a self-directed IRA. Both things are true, but not really together, right? Like do you get what I'm sort of asking here is kind of
Mm-hmm.
how that how that distinction is made. Yes, there are tax benefits to real estate, but if you're investing out of a self-directed IRA retirement account, you're not going to maybe see the same benefits as someone who invests essentially their cash or savings.
Correct. And that's the important distinction there is that your IRA and you personally are two separate legal entities in the eyes of the IRS. One is a tax exempt entity, your IRA, and the other is you as an individual. So yeah, when you invest personally in real estate, yeah, you get a number of benefits on your tax return for write-offs and deductions and things like that to limit the taxability of the income you received. So the IRS allows you to take those write-offs because you're having to pay tax on the income. With an IRA, in most circumstances, you're not paying taxes. You personally are not paying taxes on the income as it goes back to the IRA account. Since the IRA is receiving the income and not you, you cannot then get the benefits of the deductions and the write-offs again because you personally are not invested. It's your IRA account as the actual investor. So yeah, I think for people who have, let's say you're looking at a $50,000 investment and you could make it personally or through your self-directed IRA, that's an analysis you're going to have. The tax benefits I would get personally, maybe that's going to give me more of a benefit long-term than not paying tax on the income if I do this through my IRA account. So that's certainly an analysis. I think the other way that we encourage people to look at it at times as well is the money you do have in your IRA or you have in your old 401k account, whatever that amount may be, your goal should be prior to that retirement age to grow that account as high and as large as you can, really, and get either good consistent income or just good chunks of income into that account. So the more money you have, the more money you'll have to live off of. So in that vein, is an investment into, say, a syndication or real estate or whatever you would do in a self-directed IRA, is that going to potentially give me a better or more consistent return than where my money is at now? So for that same $50,000 investment, if I left that $50,000 in the stock market in 3 to 5 years' time, where am I going to be better off? Or where am I going to feel, not necessarily be better off because you don't know what the stock market's going to do, but can I maybe asleep for the next 3 to 5 years and know that money is being invested and getting a consistent return? So yeah, there's two ways of looking at it, but yeah, the tax consideration, certainly if you're considering IRA versus personal, you're going to look at the benefits you get personally that you don't get through the IRA account.
Yeah. Yeah. That's one of the things I think, there's a lot of big topics that people put out there in terms of related to investing in any way. And it, at the end of the day, you have to look at what is good for your own personal situation. And so it may depend on how old you are. It may depend on, kind of just whether you're considered a real estate professional status or not. Like there's all kinds of things, implications there from a tax standpoint. One thing I wanted to reiterate that you did mention there, but I think important because I've gotten this question. If you invest from an IRA, the distributions are going back to the IRA. So you can't invest from your IRA and then have those distributions come to like your checking account. It doesn't work that way.
Correct. Yeah.
Correct,
Because the IRA is the investor. The IRA has to receive the initial income. Now, if you want to later take that money out as a distribution, because you're of that age when you can take it out without penalty,
right,
you can certainly do that, but it does have to come to the IRA first.
Yeah. Yeah. And one of the things I sort of like about the idea of investing out of a self-directed IRA is a lot of people list illiquidity as a con or a negative of investing in real estate. I don't agree with that. I think sometimes it's better if you can't make snap decisions and sell all your stock because it dropped down a little bit. I I think sometimes illiquidity is a good thing to help mitigate some of our emotions when it comes to investing. But if that's a concern of yours, you can still get into real estate by investing through a self-directed IRA, because that illiquidity doesn't really matter any different than your normal IRA. So again, as you mentioned before, you can break out some of the IRA that you already have existing and put it into real estate, so you have diversification within that retirement portfolio.
Yeah, excellent point. Yeah, because it's, again, going back to my example, you're looking to invest $50,000, and it's, you made the decision like, I don't want to miss out on this investment opportunity. It's a great return, great operator. This is going to be a home run investment, so I want to make it. Where do I pull those funds from? And if you are making that analysis of, I have money in a retirement account that I'm not going to touch for the next 15, 20 or more years, and if I do, there's penalties involved, or I have my personal savings account, which has plenty of cash in it, but that money is also there for medical emergencies, loss of jobs, unforeseen life events where you can touch that money more quickly without penalty. Sometimes people say, I like to keep my cash there because I don't know what the next 3 to 5 years holds personally. But I know that the most unlikely place I'm going to touch is my old 401k or my IRA account. And that can be the genesis and the reason behind making that investment from the IRA account. Because like you said, there's penalties, there's taxes. If you touch it, most people, like you said, look at it as an illiquid investment. This is for me when I turn age 65 or older. That's when I'm going to start using that money. So for right now, it doesn't matter if it is tied up in something that's illiquid.
Yeah, yeah, and something else you just sort of brought up that I wanted to ask about or mention you said specifically old 401k, and I think that's something that I've run into. Again, these are just personal experience things, but speaking to an investor who wanted to invest out of their retirement, didn't have the cash, wanted to invest in real estate, but the 401k that she had is her current employer, and so something that's kind of important for people to know, and maybe there are ways around this, but if it's a 401k controlled by the employer you work for currently, it's typically not accessible money. You're not able to really pull that out, is my understanding.
That's correct. That's unfortunate. But yeah, for the IRS, the rules regarding 401ks, if you're with a current employer, that current employer typically gets breaks on the fees that they pay to administer the 401k. And the trade-off is the company providing the 401k service is going to require that any current employer keep their money with you. So you're not able to take that money, move it out to another custodian, out to another IRA account. So that is the downside of the current employer plans. Once it becomes a former employer plan, the law does not permit them to hold on to it. They have to let you at that point roll some out and move those monies if you wish. That being said, it's always worth a call, even if you're looking at, you have a current employer's plan. You can always call and ask if you have any flexibility. I've run into a number of people over the years who have had the ability to maybe at least take out a portion. Either the money's been invested for a certain amount of time, or they've reached a certain age where they can pull money out. And once you hit age 59 and a half, even if you are still employed, you can certainly take the money at that time. That's the one exception too. But that's the unfortunate part of the current plans. You typically don't have a lot of investment options within those plans as long as you're currently employed.
Yeah. And I didn't know that if you were still employed at 59 and a half. So that's an interesting piece for people to understand. And I kind of wanted to bring this up too, because I think people change jobs. That's not uncommon. And I think like a lot of times when people change a job, they just kind of automatically they might take that old retirement account and just roll it over into the new employer's account, which then gets locked up in a lot of cases by that new employer. And so if you're changing jobs, anyone who's listening, it may be valuable to think about at that point, okay, I'm going to take that old 401k and now I'm going to roll that into a self-directed IRA. I'll still have a 401k at the new company to sort of start and continue investing in stocks and that's your opportunity to diversify that retirement portfolio like we were talking about.
Yeah, I mean, I mean, we at Advanta we don't know supposed to give advice, so to speak, but I would say when
Right.
you leave an old employer's plan, it almost never makes sense to move it into the new employer's plan unless there's some investment that they have access to that you can't get. Otherwise, just take your portfolio and move it to the IRA. You're not, again, you're still going to get your contributions at your new company, but self-direction aside, even by taking your old 401k and putting it in a brokerage account IRA, you're going to get far more investment options than what you probably have available to you now. So to me, again, yeah, you're right. People do it because it's easy, or oh yeah, sure, they said I could just move it over. I'll just have everything there.
Right.
Probably not always your best move financially to do that because you're going to, like I said, you could end up locking up that money again or limiting
Yeah.
your investment options.
Yeah. It's definitely that the limitation. Like I said, I some of this stuff I learned unfortunately because I was talking to someone who wanted to do it, and she had changed jobs, but she rolled all that over into her new 401k, and then it was like again locked up. So
Mm.
it's just people being aware of this type of scenario, because again, changing jobs, it happens. Like most people don't work at a company as long as you've worked at Advanta, so it's kind of
Right.
something to keep in mind when you might make that job shift, that hey, okay, I've got this X amount of dollars in an old 401k. Now's my opportunity to roll it into a self-directed IRA through which I can do whatever I want with it. I can invest in real estate, or sort of any number of assets, and then you still will have whatever your new employer has. So you don't. It's not like rolling that money over into your new plan gets you, sort of vested any faster or anything. It doesn't. It
Right.
has, as you said, there's really no advantage to doing it. So I think it's a really good important point for people to know. Um, Scott, before I move to the questions that I like to ask each guest, is there anything else that you think is kind of important for us to get out there in the topic of self-directed IRAs for people listening? I don't want to miss anything. I've asked a lot of questions based on personal experience, but I don't want to miss anything you feel is important for people to know.
Sure. Well, as piggybacking a little bit on what you were just saying, I think it's important to know. I mean, I talk about, we talk about self-directed IRAs and we do seminars and webinars, and sometimes we are speaking to the account holder, the IRA account owner and person who would be looking to invest in a project. But I think the other
Mm-hmm.
thing that gets missed at times are people who maybe not so much now, but certainly several years ago, the people raising capital didn't realize that what a potential opportunity this was for them to raise money from. I think that's something that gets missed by other people. Say, I don't have an IRA, but I'm starting a syndication or I'm flipping homes. Why do I care?
Yeah.
And the reason is kind of what you were talking about. There's a lot of people when some people when they switch jobs just say, hey, let me move my old 401k into the new one. They just move it over. There are a lot of other people who, in the chaos or whatever's going on of switching jobs, maybe they're moving cities, things like that, forget about their
Yeah.
401k.
Yeah.
And then they get a statement every so often, like, oh yeah, I got to do something about that, but they don't. They forget about
Yeah.
it. So there's a lot of people who have money there that would be happy to invest in a project. So keeping that in mind, that if you're raising capital, this can certainly be a good avenue for you when investing, or looking for those investors, people who have money that they forgot about, didn't know, or as we talked about earlier, they'd rather use that money than their personal savings account to take advantage. So I think that certainly is one thing. The limitations, the only things you can't invest in are you cannot buy life insurance and you cannot buy collectibles. Those are the only two classes of investments. There also are some restrictions on if you wanted to use your IRA to invest in, say, a property that you're going to live in, that you're going to use. You can't lend yourself money. There are some restrictions with whom you can deal with, and it's typically going to be you and some of your close family members. But again, there's really all different things you can do. And again, as we touched on earlier, it's not an all or nothing strategy, right? You can have, and most of
Right.
our clients do, like so, have an IRA with a brokerage firm holding kind of more conventional or traditional assets, and they have an IRA with us holding, some of these unique alternatives. And you are able to have, in this case, the best of both worlds, and move money back and forth between the different types of accounts.
Yeah. Yeah. No, great points. And I'm glad you brought up. I was actually meant to ask about that. I know there are rules about you're not allowed to invest out of your own retirement accounts or family retirement accounts into your own deals. I mean, I know
Mm-hmm.
there are nuances to it that maybe there are ways around that, but I know that there are, that's one of the sort of important restrictions. I can't take my own IRA and put it in my deal.
Yep, and that's where the calling me, calling one of people on our staff
Yeah.
here, and talking to them about that, because yeah, like you said, there's little intricacies. There's certain things you definitely can't do, and there's other things where you get in a little bit of gray area, or if you structure it a bit differently, then you might get yourself in the clear. So that's where just a consultation makes the most sense, and go over your facts, and we can let you know how the rules interplay with that.
Yeah. Yeah. Absolutely. Um, well, let me switch gears and ask you the questions I ask every guest. And the first one
Sure.
is what is your why? The show is called Know Your Why. I always like to know kind of what's motivating people to sort of continued success and growth in their business, or whether it's a business or real estate or whatever.
Yeah, so I'd say one of the whys, I mean, kind of on a personal level, I have wife, two kids, great, want to obviously provide for them and motivate them, and
Yeah.
seeing them all grow up. I have a son who's going to be going to college in another year, so year and a half. So there's personal motivation to continue to strive to do well in the business. But I think, I mentioned I've been with the company for almost 18 years. And when I started, there was three or four of us. Now we're up over 40 plus employees. And so I want to continue doing well. There's a lot of people that we hire that are new, or that are, they're relying on the leaders in the company, which I'm lucky enough to be one,
Yeah.
to continue to grow the company. And that's a motivating factor for us, is to, as a company, wanting to continue to grow, build, and help support the people that work here. And then really other on the professional level, I've always, I've been presenting and doing things like this for several years now, and meeting people and getting people to call and talking to them, and having people say, I'm so glad I found out about this. It's opened up other opportunities. It allowed me to get my money into something more I can control. And so I've always enjoyed having those conversations with people who are kind of get that little light goes off, or the spark goes off of, hey, I can do something different, and they get excited about it. And they want to talk about it. They want to go through the examples. That's been motivating to me to continue to help spread the word. It's still, probably 5% or less of retirement accounts are self-directed. So there's a lot more people who don't know about this. And so I've always really enjoyed getting to know those people, talking to them about it, and presenting, and seeing those little sparks go off, and saying, hey, this is I'm so glad I found out about it. Because, at that point, it's not about the dollars and cents. You're helping somebody then feel more secure about what they're going to do, with their retirement accounts.
Yeah, I think it's great, and it's funny. You mentioned the sort of making sure that letting people know, and even though I know, like I already had an Advanta account. I mentioned that sort of venture capital thing. I was presented that deal. I really wanted to invest in it. Didn't have cash. I was like, liquidity was low, and I said, just send an email to the sponsor, and I was like, I love this. I love what you're doing. I just can't do it right now. And he was like, well, that's great. We'd love to have you on board if you have an IRA. And I'm like, what an idiot. Like I knew I had already an account at Advanta, and I had my other IRA. And I was like, oh yeah, I can just take some of the money from the brokerage account IRA and move it over and be able to invest in this. And it's just, I think it's just one of those things that the not knowing, and maybe not always having it as like because most people have those retirement accounts and never pay attention to them until it's time to retire. Like it's like,
Mm-hmm.
they just kind of
Right.
go along with whatever their employee plan was or whatever. And it just sits there. And then like my 401k that I had, the performance after fees and all of that was terrible. Like when
Nope.
I left that job, I looked at the numbers and I was like, this isn't good. I mean, it's good because if you get match and you get free money along with it, but like the actual performance of the 401k was not good at all. So I, I was like, well, I know I can do better than this in real estate. So it's just
Mhm.
kind of the understanding of all of it and how these things work. I think that it's just so important to. I'm glad that you're on here today, and we people can find you and have these conversations as well.
Yep. No, like I said, love talking to people. That's, like yourself, for that exact reason.
Yeah. So second question for you, tell us something about yourself, Scott, that isn't common knowledge, special skill, a hobby, anything just to let people know you a little better.
No special skills. I'm a decent golfer, but that's about it. Something that's not common. I mean, some maybe people close to me know, but I am a huge fan of English soccer.
Okay.
Have a team. My son and I follow a team over in England, and so Saturdays and Sunday mornings, like I don't necessarily get as excited about NFL football. I get excited about getting up at 7:30 and watching my team play on a Saturday morning across the pond. Actually, the neat thing to me always has been I get to watch my team play, and it's when they're done, it's still 10 o'clock in the morning. And I got the rest of the day. So
Right.
yeah, that's that's something that I mean. I certainly love NFL, I love college football, I love American sports too. But that's kind of become one of my passions in the last several years is really following that game and following the team. And was lucky enough to go this past right over a couple weeks ago, go over and see a game in London and take part of that.
Very
And that
cool.
was with my son, and so that was quite the experience.
Yeah. What team?
It's Tottenham,
Okay. Yeah.
Tottenham Hotspurs. Yeah, they
Yep.
if you're familiar with English soccer, they're the
Yeah.
butt of the jokes sometimes, but yeah, they're exciting.
Yeah, no, I love soccer. I've been playing soccer since I was a kid. Don't I don't watch a lot on TV in large part just because nobody else in the house wants to. My
Yeah.
my wife's not a huge fan. My kids are probably still young to get real interested in it. But yeah, no, I love soccer. I still play. But it's I think just it is a fascinating game. But I've never gone to a game outside of the U.S.
Hmm.
But I'd love to. I'd love to. I
That
think.
was yeah. That was my first one, and actually, it was my son and I. Of course, were just we couldn't wait to run our trip. Like we can't wait for
Yeah.
that day to come. Do we go? But even my wife and daughter, I mean, they walk by the TV when we're watching it and kind of, hey, did they win today or lose? Just so we know what mood you're going to be in.
Right. Right.
They both really enjoyed it. So yeah, it was a little bit different. I mean, I guess it's the equivalent, I think, of someone maybe going to an NFL or a college football game here with the rabid fans. It's the same kind
Yeah.
of environment over there.
Yeah. Yeah. I remember when the World Cup was here. I forget what 94, 90, something like
Yep.
that.
Yep.
I got to go to a semifinal game, Italy and Spain. This was
Wow.
at the old Foxborough Stadium, and when I told you I'm from Boston, so I
Mhm.
don't remember. We were like at the top of the stadium. I mean, not good seats, but it was the. I mean, I love football. I told you I have like season tickets to the Patriots. Like I love that sort of rabid fan base, but this was at a whole nother level. It wasn't a U.S. team. It was it was
Mhm.
Italy and
Yep.
Spain, and still like just everybody there was just so passionate about. And I know that's kind of watching. Um, I know that's how watching soccer or football, if you will,
Mhm.
in Europe is. It's similar to what we see with our fan base for the NFL.
Yeah, and the thing that's fascinating to me, I think, for instance, the Premier League is for people who don't know, is like kind of like the NFL of soccer in England.
Yeah,
That's their top league. They have other tiers though below that. I think even just in the city of
yeah,
London alone, which of course London's a huge city, there's 5 or 6 teams that are all in the Premier League. So it'd be like having 5 or 6 NFL teams all in Chicago and having enough loyal followers in different
right,
little sects that
right,
they all still show up and pack the stadium every single week. I mean, Tottenham's main rival, the stadium is they're 5 miles from each other, and they
yeah,
both pack the stadium. So it's
yeah.
really that part to me is really fascinating. There's that many people that just they have their loyal fan bases there.
Yeah, yeah, very cool, very cool. When people hear this and they want to reach out to you, what's the best way?
Best way, 2 ways. You certainly, I always give people direct, just call me. Number is, it's an 800-425-0653. My direct extension is 1123. That certainly is one way. If you want to email me, it's my first initial S, last name Maurer, Maurer, at Advanta IRA.com. Certainly can go to Advanta IRA.com as well to learn more, and you can find my picture on there and connect with me that way too. But yeah, phone call, email, whatever works for you. I'm always happy, like I said, to jump on and talk to someone. These are great platforms to get the conversation started, but everybody has their
Hmm.
own unique
Yeah,
circumstances and facts that requires that personal call.
yeah, yeah, absolutely. Um, well, final question for you: what piece of advice would you give to someone who is getting started? They want to, and you can relate it to sort of the self-directed IRA thing, or anything, whether business or real estate related. I'll let you take that question in whatever direction you want.
Yeah, I think on the investment side, I think especially with the self-directed side, and this isn't always the case because most people come to us knowing what they want to do. But instead of maybe know your why, it's know your what. What is it that you want to invest in, or what do you want to specialize
Mm.
in? Because with the diversity, of different things you can do. Some people can get that paralysis by analysis, right? Where there's, okay, I could do this, I could do that, and I just can't decide between them. I think it helps to really narrow that focus and decide how much time do I have to devote to something? What makes, what am I, and maybe this goes beyond investments, like what am I good at? Where my skills will translate the best, and then focus on it. I don't think you don't have to do, you don't have to with a self-directed IRA buy metals and private placements and different types of real estate. If you know one area that is really where your specialty is, focus on that. I think, again, that can be like I said, take it into your professional world as well. If you're really good at something, there's no reason to be a jack of all trades, be a master of one, right? So that would be, I think, my advice.
Awesome. That's great. Scott, thanks for coming on the show. I do think this is such an important topic for people to kind of understand just what's available to them. So thank you so much for coming on and sharing everything and breaking it down and sharing your knowledge. I appreciate it very much.
Oh, Jason, thank you very much for having me on. It was my pleasure.
Yeah. And folks listening, I know you're going to get a ton of value out of this episode. So please like, rate, and review the show so we can get more great guests like Scott. And thank you all for listening.
Hey there, I am Dr. Jason Ballara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?